What's up, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is August 17th, 2021. Please go ahead, click the like button on this video and subscribe to my channel. Today we're going to talk about the price action in the indices, and I must say we're having, some crazy price action. A lot of back and forth, a lot of, we're up in the morning, down into the close and vice versa. So we're going to go through all of that. Let's jump right into it. Before we do, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, so box scores for today. We had S&P 500 finished down 0.66 as measured by the SPY. And there's actually some nuance to that. I'm going to talk about that in a moment. NASDAQ QQQ finished down 0.88%. We had the IWM small caps finish down 1.22%. And then we had the Dow Jones finish down 0.77%. So it was a sea of red across the board. And, to varying degrees throughout the day. In the morning, it was like, all right, a little bit of redness on the tape, breadth is very poor. Then in the early afternoon, it was like the floodgates opened and, the market really looked like it was going to fall off a cliff. Towards the end of the session, though, some bids came into the market and we did not close on the lows by any means. But want to see something crazy? So we basically had like a ripper of a rally into the close. Within 10 minutes, we just ripped higher. S&P 500, this SPY ETF closed down 0.66%, but immediately, once the bell hit, the ES futures, look at this. So this is next level, craziness within the market. So as of right now, we're in this, what looks like this choppy short-term, pretty much garbage price action. A couple days ago, we broke into this weekly value area and we immediately bounced right out. This was yesterday. And it was like, wow, look at this incredible rally. We had essentially 5 green candles in a row. Overnight, we sagged a bit lower. And then, like I said, the floodgates really opened. And check this out. So we actually dipped below this weekly value area. And we ended up rallying into the end of the session. So this is 1 o'clock, 2 o'clock, 3 o'clock into the close. So it's like, okay, maybe the market's getting its footing back. We were below value and then we ripped all the way back up to above value by the close. Immediately after the bell rang, we sold back into value. So for anyone that thought okay, the market's coming back, same as maybe yesterday. Now it's, okay, immediately after the bell, we went from down 0.66% in SPY to down 0.8% on the ES futures. So in terms of, which way this is going to resolve, we have, a lot of weak breadth. We have, unrest in the Middle East. We have Jerome Powell, who may or may not start tapering, and we're going to get some more information about that on the 28th. We have options expiration this Friday. So a lot of different dynamics hitting the market. Let's go over to our NASDAQ and take a look and see what that one did. NASDAQ. Yeah, so this one, same exact deal. We got to bounce into the close and then rolling right over after the bell. So it's a very challenging market because if you are, selling into the weakness, you might get caught by one of these bounces. And if you are, buying into the strength, you might get caught in, the next leg down or whatever it ends up being. So big ranges, very mean reverting price action. But yeah, for the NASDAQ, could there be lower prices over the following week? I actually put on into the close a NASDAQ hedge. So we will see what happens with the NASDAQ, but the NASDAQ is below this weekly value area. The Russell, this one is definitely the most, oversold of the group. Is RTY, same exact deal, rallied into the close and then, hit some turbulence right after the bell. Yeah, the Russell well below this weekly value area, and we're actually below this Venom S2 pivot. So if any one of these is actually going to have like a sustainable bounce, I would think it would be the Russell from this point. But yeah, this is a pretty clear short-term downtrend. And then the Dow Jones also showing some resilience into the close, and then right after the close it essentially gave up the ghost. So let's jump into our market breadth. And this, very poor across the board. So this is definitely like a washout, in terms of, just trying to pick winning stocks. When the market breadth is very poor, the odds are really just out of your favor. So just for like a rough estimate, if you were buying stocks, let's say in the S&P 500, you have a 29% chance roughly of being in a winner, for instance. And then you can see the Dow Jones had the worst breadth with 24% advancers. We never really got any traction on this. Very dissimilar to yesterday where we had breadth flip negative intraday. So this is the sign of, in my opinion, kind of a weak market. Invis heat map. We did have some carnage, in the semiconductor space. Look at this. Tesla had a rough day, but it closed well off the lows. Let's pull up Tesla. Tesla, yeah, another one rallied into the close. Looks like it hit a snag right after the bell. But yeah, Tesla. So I noticed a lot of stocks did this where, Tesla, for instance, really undercut this monthly point of control. And then, we had a very powerful rally intraday that pushed us back above this 200-day moving average. And the same thing happened yesterday, which makes this, very, very tricky here where, yesterday you could say, hey, Tesla, it pulled down to this monthly value area high and it found support and, great, this thing caught on the 20-day simple moving average. Today, Tesla, same exact deal, but, much lower. So for tomorrow, heading into the session, what do we expect? Tomorrow now it's going to do the same thing, but with this value area low. It's very tough to get a handle here. And then let's pull up, let's see, so on our heat map, healthcare was, the bright light within this market. So that brings us over to our sectors. So this is, I think we're getting a bit of a washout. In this, if you're not too heavily exposed right now to the market where you're not like bleeding out on all your positions, you're going to get to take advantage of this, which is awesome. So this is where I start to get a little bit more like active in what I'm researching, trying to find the relative strength in the market because, hey, we're getting some of these red candles in these different sector ETFs. So we had, let's take a look at some of the weak areas, and then we'll also take a look at some of the very strong areas. We had the KWEB Chinese Technology Fund down another 3.11%. So this is another thing. We have Chinese equities completely crashing. These, they're getting obliterated. So this is another thing, like we're seeing global markets really getting decimated. There's just a lot of factors that's like, this really isn't like the best environment for just, killing it on longs. So we had those names down. We had, what else? Let's see. We had the home builders, which are in our top momentum slot, get hit the hardest, down 3.22%. And then take a look at, speaking of getting hit hard, the blockchain ETF was down 4.99%. So that, really got hit. For the strong areas of the market, we had, again, just these very defensive areas of the market showing strength. We had healthcare, which was up for the session. We had consumer staples, barely positive, up 0.05%, and utilities. So market participants, they're still trying to get to safety, is what it looks like. Style factors, we had everything red except Minvol. So this doesn't look, it's not really a good picture. Like I could see if it was like, we're starting to get bids in like high beta and like these other areas of the market, maybe people are starting to, buy the dip. but it looks like the dip is really being bought in min vol. Now let's take a look. We'll pull up some of my trades for the day. And really what I did today, so I had my VVIX risk indicator that flashed its signal yesterday, which was, a sell signal. So yesterday and the day prior, I'd been reducing exposure. I reduced even more exposure this morning. So I was able to sidestep a lot of the carnage. My portfolio was okay. So I'll just go through some of these because I had a lot of trading activity. But yeah, in the morning, really just reducing exposure to the market. So I closed out, my DigitalOcean, closed out my MicroStrategy, which was, my second largest holding. I closed out for 673 spot 66. I'd paid 613 spot 21. And let's see how MicroStrategy ended up. And it's always, you never want to sell your core holdings, but when the market just becomes pretty risk off, it's, sometimes it can be for the best. Yeah, this one closed a little bit lower than where I sold it. So close it out for a nice winner. The only name that I was really getting pretty aggressive in was SE. And SE, they reported very strong earnings. And this was, one of few names that was nice and green today. Check this out. So SE, and I'll pull this up on this chart because I think on TradingView, it looks even better. Yeah, so SE, we have this pivot level right here. I'm going to mark it off actually. And we'll do the horizontal ray. Yeah, so this pivot, yeah, right here. And we closed pretty much right on the pivot level. So we pierced through it intraday and we had a nice rally, ended up coming back in a bit. But for a very weak tape, this was nice price action. So this is, right up to that buy point. We will see if we get some follow through, in the days, weeks, and months ahead. But this one looked really strong. So I added some common shares at $304.71. The stock continued to progress, so I actually added to that position for 308 spot 10. And then I actually traded some call options on this one as well. So I just scalped some call options early in the day. Saw the market was getting a little bit weak, so I hit out of these for a winner. And then I ended up entering them a little bit later in the day as more of like a swing position, because I do think when the market finds its footing, I think SC will show some relative strength. I closed out some options positions, closed out AMD, closed out Twitter. I had some SPY puts on, and I closed these out into the close. So this ended up being a very small winner. Closed out for $7. I had paid $6.77. Because with SPY, like at any given moment, it looks like the market, could just have like a face ripper back to the upside. So take a look at SPY. This candle that it put in bounced off the 20-day and then essentially putting in a doji. But then, of course, we already mentioned after the close, it's kind of like dumped a bit lower. So yeah, closed out my SPY, but I did add a Q's hedge. So basically my thinking is the market's just very volatile. It's going back and forth. So I don't really want to be exposed. Right now, in terms of options, I have one long position and one short position. And I feel comfortable with that, for right now. Because I don't really feel like it's a good time to, get heavy with exposure. But at the same time, this isn't like an incredibly easy market to short either. There's a lot of like very violent bounces within this short-term downtrend. So let's take a look. So those are my trades for today. Let's check out our options order flow and see what was going on. And I think tonight, for me, this is going to be a great night to just go through the market and see like what's looking oversold, what is showing relative strength, where could there be some opportunities. So yeah, this is our trade tape, Let's go over to our options races. We'll look at today's combined flows. Tesla, of course, pretty much always the leader. It's very rare when it is not. You can see Amazon in second, and Microsoft actually took the lead into the end of the day. So let's check out the chart for Microsoft. Yeah, Microsoft only finished down 0.52%, so definitely showing some relative strength. And we had, a ton of call buying in this name. But yeah, in terms of what we were talking about yesterday, this is why, like, when one of my risk signals hits, I just try to obey the signal. Because we did get, yesterday it was like a rope-a-dope where it was like, okay, we had a little bit of weakness off the open, and then we just rallied for like 5 straight candles. But then really what it looks like is, for the most part, anyone that was buying the dip yesterday is now underwater. And then of course, I'm sure there were people that bought the dip today. And what's going to happen to them tomorrow? Could they just go underwater as well? I certainly, I don't know. The answer could be yes, could be no. But I see this virgin point of control on the SPY right here at around 440 spot 24. So could that level be taken out when before this down leg is all said and done? Absolutely. So yeah, a lot to digest for today's price action. But yeah, that's why I think when you get these risk signals, or when you feel like something's not right and you're seeing things within the market that seem dicey, it definitely makes sense. You have to get to that defensive posture, or else basically like what ends up happening is you just essentially blow yourself up on every down leg, and then you're just trying to claw yourself back to even on the next up leg. So yeah, I'm super pumped for tomorrow's action. I am super curious to see how this plays out, in terms of if we get a nice bounce day, like an actual green day in the market, or if we just roll right over. But we'll have to see what happens together. So that being said, that about does it for this market recap video. Hope you all have an awesome rest of your evening, and I will see you all tomorrow.